everyone, welcome to Business at 9. I'm Shibani Gharat, joining you from Mumbai, joining you from Chennai is my colleague Jude Sanit. Now, Fed Chair Kevin Warsh has delivered a clear inflation-focused message at Jackson Hole, reaffirming that the Fed's 2% PCE inflation target remains firm and fixed. Now, Warsh warned that inflation cannot necessarily be expected to correct itself, stressing that delivering price stability is the Fed's responsibility. He also said a good majority of Fed officials favored waiting before changing rates at the July meeting, keeping the outlook for the next rate decision firmly in focus.
The Fed's preferred measure of inflation, the one I talked about earlier, the 12-month change in the PC price index stands at 3.7%. with a 6-month change a little above 4. The comparable measures from the CPI index are also elevated, as are core measures both of PCE and CPI inflation. And none of these measures are perfect, but they all tell a similar story. Inflation is running above our 2% target. So the Fed's predominant focus right now should be on prices. So what's our job? The job for policymakers is to capture underlying trend inflation. Easier said than done. We want to gauge whether underlying inflation is rising, falling, or seems to be stuck in place. We also want to understand not just the direction of travel, but the speed. Each of these broad inflation measures have fallen significantly from their highs of a few years ago, but progress over the last couple of years has been more modest.
Shifting focus to Wall Street next, U.S. stocks were largely unchanged on Friday as investors assessed corporate earnings and reacted to the Fed Chairman Kevin Warsh's latest comments, where he flagged off concerns over elevated inflation. Now, talking about the indices, the S&P 500 traded near the flat line, whereas the Nasdaq Composite was marginally higher. The Dow Jones Industrial Average, meanwhile, was also broadly flat. We have Sunidhi joining us with more updates on the U.S. markets.
That's right. To truly understand the impact of what is happening in the US markets, let's take a quick look at what happened during the Fed speech. So during the Fed speech, Warsh made it clear that inflation remains the key priority right now, with PC inflation still well above the Fed's rate. His message was clear on policy communication. He said that there should be less forward guidance and more flexibility, and he wants market to focus more on economic fundamentals than trying to predict the Fed's next move. At the same time, he also highlighted resilient growth, strong corporate earnings, AI-led investment, and also flagged that AI is a new factor of production and it is a new variable enabling growth going forward. However, the core message was the commitment to discipline and not a decision. What this did was that in the Wall Street, markets saw some volatility during the speech, but however, after that, we saw that the markets recovered a little. In treasuries, we saw that yields moved higher, particularly at the short end, as markets priced in a more cautious outlook for rate cuts. But coming to oil, prices remain subdued and are heading for weekly losses. However, risk premiums have eased somewhat as the US leans more towards sanctions and diplomatic measures. But the choppy flows through the Strait of Hormuz are still putting a big hang on the oil prices. So the key takeaway right now is that Warsh is keeping the Fed's options open, with inflation still being a big concern right now.
Right, now moving on, the much-awaited IPO of Jio Platforms has received SEBI approval. What does this mean for the mega listing, and what are the next steps before the IPO hits the market? My colleague Harsh joins us from the research desk with all the details.
Well, SEBI has given its nod for Jio Platforms IPO to now get listed. I'll quickly take you through what is expected. It's going to be one of the largest listings in Indian IPO history at 37 to 40,000 crore, at least tentatively. We still await the RHP now, the red herring prospectus, but based on the DRHP, that is really the detail coming your way. The other piece is it's entirely a fresh issue of shares. 27 crore shares are proposed to be issued by Jio Platforms. 27,000 crore of this IPO is going to be used to pay off debt. The balance is going to be used for general corporate purposes. In terms of what Jio Platforms does, I mean, most of us know it, but it's a tech platform built around proprietary digital technology and a pan-India digital connectivity. The business covers mobile broadband, fixed broadband, entertainment, cloud, enterprise, digital services, IoT, 5G and cybersecurity and AI, all of it under one roof. The current customer base of Jio Platforms is 52.5 crore customers, of which nearly 27 crore customers are 5G customers, and that's really where the cream lies. Even in terms of the customer base for fixed broadband, that stands at 2.7 crore, which is quite large, and they continue to gain market share in that space. When you're looking at the financials, the top line has grown at a 16% two-year CAGR, FY24 to 26. EBITDA has grown at a faster clip, 18% CAGR, and PAT margins have risen from 19.5% to 20.5%. So you've seen a 100 basis point rise in PAT margin as well. What happens next? Well, hopefully that listing will happen in the next 6 weeks or thereabouts. And of course, first there'll be an RHP filing which will happen, and a price band will be disclosed, and we'll understand as to what is the pricing at which the Jio Platforms IPO is coming in at, and thereafter will happen the listing. Entire duration typically takes 6 weeks, but because this is a large one, we'll have to wait and watch with regard to the timelines.
Well, that IPO is something we'll certainly look forward to. But moving on, let's take a look at how the market performed this week. The Nifty ended in the red for 3 weeks straight. In fact, Nifty IT, pharmas and metals gained. But on the flip side, FMCG emerged as the biggest sectoral loser, followed by Nifty oil and gas and Nifty defense. Snehi is here with her market roundup.
Well, yes, once again, it's been an action-heavy week gone by for the Nifty, however, with all the ups and downs that we've seen in the week gone by, because remember that the Tuesday and Thursday in the week gone by were the first monthly expiries playing out under the cash adjustment settlement. So that was something that was at play as well, and that caused a lot of volatility on the market. We saw some massive moves coming in on Sensex as well on Thursday. Nifty, which was expected to be under pressure, and which was the case all of Tuesday, spiked quite significantly in the cash adjustment session. So that was also something that we were keeping on our radar. But given everything and all, in a nutshell, the week has ended absolutely flat, because the Nifty has ended with minor cuts of 3/10. Nifty Bank has ended absolutely flat. In terms of some sectors, IT has been a through and through outperformer, 3.5% uptick on that sector for the week gone by, with stellar gains coming in on Friday itself. There was positive read-through in terms of the commentary from Nvidia as well as Salesforce globally, and that had a very positive rub-off effect on Indian IT. This was followed by good gains in metal prices, because steel prices continue to remain sticky and steel stocks did well, followed by gains in pharma to the tune of 0.5%. Media, PSU banks did well, and oil and gas was absolutely flat. Where we saw the biggest cuts was Nifty Defense and FMCG, about a 0.5% cut on both of those. You had some factors that were playing out for FMCG. First, the floods in Nepal, where a lot of FMCG companies have minor exposure. Sugar prices saw a spike. Palm oil prices also continue to rise. So on account of all of that, FMCG as a sector was under pressure, followed by cuts in Nifty Energy, consumption, auto, as well as Nifty Realty and Nifty Bank, both of which, Realty and Bank, were absolutely flat for the week gone by. Now, if I have to take you through some of the top gainers and losers, Adani Enterprises and Kotak Mahindra Bank did really well from the Nifty pack. On the flip side, the top Nifty losers were Shriram Finance as well as Bharti Airtel. From the banking pack, Federal Bank and IDFC First Bank were under pressure. From Nifty 100, while SAIL and Glenmark Pharma did well, and in fact SAIL saw an uptick of 15%, RVNL and Dabur India continue to be the biggest losers, and you also had a 12% cut over the week on BLS International and 9% on Aegis Logistics. This in a nutshell sums up the kind of week we've seen. Lots of IPO action, lots of bulk and block deals as well. And yes, the two expiries that played out also led to a lot of volatility. All in all, we've ended the week with a tempered cut on the Nifty.
Snehi, thank you so much for getting us those details. Now moving on, Maharashtra FDA cancels Ctipla Pharma and Life Sciences drug sale license in Pune over alleged irregularities in marketing and packaging of Reactin Plus tablets. Authorities flagged an unauthorized advertising claim for the Schedule H drug and seized stock worth 11.19 lakh rupees. My colleague Akanksha joins in with more details on this.
Well, yes, that's right. Maharashtra FD has taken major action against Cipla's Pune facility and also cancelled the drug sales license of Ctipla Pharma and Life Sciences Limited. Now, this action is linked to the Reactin Plus tablets misbranding case. In fact, the FDA had earlier seized stock worth around rupees 11 lakh from Cipla's Pune warehouse in June this year. The regulator has also found an unauthorized advertisement on the packaging and also flagged storage deficiencies and discrepancies in purchase and sale records. Now, Cipla has also responded to this FDA's action. The company says it has contested the Pune FDA's order and the matter is currently sub judice. Cipla says it would not be appropriate to comment further while the matter is under judicial consideration. The company has also even clarified that the order does not allege any concerns relating to the safety, quality or efficacy of its products and does not involve or indicate any patient safety issue. Cipla has also said that it continues to uphold the highest standards of quality, regulatory compliance and patient safety. Lastly, FDA Commissioner has also warned that strict actions would be taken against violations in drug manufacturing and distribution.
Well, thanks for that, Akansha. Now, moving on, it's Rakshabandhan, and if you want to gift your sibling a stock or shares of a certain stock, here's a bit of a ready reckoner. In fact, analyst consensus on Bloomberg has said that HDFC Bank, which has been rather quiet for a while now, could see the biggest upside among the Nifty 50 stocks, but there are others as well. What are they? Well, Avi joins us with a bit of a snapshot.
This occasion of Rakshabandhan, I would like to wish all our viewers congratulations, and they can give these other stocks that they can give to their brothers or sisters so that they can remember them fondly. Starting off from the Nifty 50 pack, we can see that HDFC Bank offers the highest potential with a 43% upside, followed by SBI Life, HDFC Life and Jio Financial, which is sitting around the 200 to 40 range from quite some time with the upside of 32%, followed by NTPC. Up next in the Nifty 500 lot, when we can see that Aditya Birla Lifestyle, BLS International and Chola Financial is something that can make your siblings very happy for you when the money grows by 60% upside, followed by Inox Wind and Patanjali Foods. So it would be interesting to see that if you give your siblings something from Patanjali rather than a sweet shop. Up next we see the mid cap 150. We can see the stocks like Patanjali, Hudco, Vishal Megamart, Sale and Dabur is also offering some very good upsides, with consensus being in the favor of Patanjali Foods with a 53% upside. As far as the small cap is concerned, we can see that AB Lifestyle, BLS Chola Financial are offering some very good upside, followed by Inox Wind and Kajaria Ceramics also giving a very strong sweet spot for you to consider it as your gift for this Rakshabandhan.
Right, thanks Avi for that. Now, India's industrial output growth has slowed in July to 6.7% from two-year high seen in the last month due to an unfavorable base effect and slower growth in sectors including manufacturing. We have Prakash with more details on this.
Well, the country's industrial output growth has slowed to 6.7% in July from a revised 8.8% in June, mainly due to contraction in the mining sector. The data released by Mosby suggests that the mining sector contracted by 0.9% in July. You are aware of the fact that this is the fourth IIP data under the new series, where manufacturing output rose 7.3% year-on-year in July, compared with revised growth of 9.5% in June. Similarly, electricity generation grew by 8.7% against 11.3% a month earlier. Data also reflects that the top three positive contributors for July 2026 are, of course, manufacturing of motor vehicles, trailers and semi-trailers, which grew by 22.2%. We have also seen significant growth in manufacturing of electrical equipments, along with the manufacturing of machinery and equipments. Within the manufacturing segment, 19 out of 23 industry groups have recorded positive growth in July. However, there has been mixed performance as far as consumer goods are concerned. It is important to note that the government has shifted from wholesale prices to producer prices for calculating factory output to capture actual production data. And this is the fourth IIP data under the new series. We have seen industrial growth slow to 6.7% in July.
Well, with that, we're slipping into a short break, but don't go anywhere because Business at 9 will be back in a few moments from now, so keep staying tuned to ET Now.
Welcome back. You're watching Business at 9. I'm Shubhani Gharat, and joining us is my colleague Jude Sadit. Now, a significant development in India-US defense partnership as India has signed a letter of offer and acceptance, in fact, for the procurement of a Javelin anti-tank guided missile system from the United States through the foreign military sales process. My colleague Sumita is bringing us more details about the deal.
That's right. Javelin is all set to boost India's firepower as India has signed a letter of offer and acceptance for the procurement of Javelin anti-tank guided missile system from the United States. Remember, Javelin is an advanced medium-range fire and forget anti-tank missile system. It's jointly produced by Javelin joint venture RTX and Lockheed Martin, and it was used exclusively during Op Sindoor last year. Now, as far as this entire LOA is concerned, let's go back to November 2025, which is when the State Department of the United States, it approved a potential $93 million sale to India, and the package included 100 Javelin FGM-148 missile rounds, 216 Excalibur guided artillery projectiles, and of course this is in continuation of that. So one important thing that we're given to understand is that this deal is going to have a big Made in India component, as Sergio Gore, the US ambassador to India, also tweeted suggesting that the purchase could pave way for co-production opportunities. So, of course, this deal is all set to boost cooperation, particularly in the space of defense industrial bases between the United States and India. And, of course, it is something that the leaders of both the countries, they also agreed upon when they met last year.
Right, and shifting focus to the Nepal flash flood tragedy next. The death toll, it seems, due to the massive flash flood in Nepal has reached 538, with nearly 1,000 people still missing. In fact, teams are racing against time to clear debris in the pursuit of more extensive rescue and relief operations across that valley. In fact, with the August 27th flood still in people's collective memory, especially given that it's just been a couple of days now, there is in fact a threat of another lake burst that is looming large on Nepal. In fact, the National Disaster Risk Reduction and Management Authority of the country has said that an increase in the water levels of a lake formed by avalanches in the country's Tibet border could in fact pose fresh risk of a whole new flood. So, Shubhani, it seems like Nepal's problems seem to be compounding on account of these flash floods and lake levels increasing.
In fact, External Affairs Minister S. Jaishankar has confirmed that a third flight carrying 10 tons of humanitarian assistance has departed for Kathmandu. The assistance includes portable generator sets, dignity kits, food packets and water purification tablets. An 11-member team of doctors, paramedics and recce team for tunnel rescue operation is also on board. Now, External Affairs Minister S. Jaishankar also says that India remains focused on locating more than 315 Indians who are still uncontacted after the devastating floods in Nepal. Now, around 85 Indians have been rescued so far, including a group of 21 pilgrims who were rescued by Nepal Army and brought back to India. He had an interaction with the returnees and learned about the rescue effort by the Nepali authorities.
I received a group of people, Indians who had gone on pilgrimage to Mansarovar, Kailash Mansarovar, and they had been rescued after the floods. So they were brought back to Kathmandu. They were rescued by the Nepali army, and then our embassy arranged for them to come back. So I just came to meet them and, of course, shared our great relief that they were safe and sound, and learned from them about their experiences. They were taken to Kathmandu, then our embassy has arranged for them to come back to India by the flight which has just come in. So I want to say right now, we are still very much focused on contacting all the Indians who are dead. We believe little more than 300, exact number keeps going up and down. About 315 Indians are still not been contacted. Roughly about 85 Indians have been rescued from various places, including this group of 21 people who have just arrived, and they told me about exactly what happened to them, how the floods came, and they were very thankful, particularly to the Nepal army, which made this great effort to get them out of that very difficult place.
Well, all we can say right now is that our thoughts and prayers are with those stranded in Nepal, and Nepal itself is a country going through one of its worst tragedies in recent times. But on that note, it's a wrap from us here on Business at 9. Thank you so much for watching. You have a good weekend, and we'll be back soon with more news and updates from ET Now. But from all of us here at the studio, it's goodbye for the moment and good night from us.